around about where the 618, the 236 and the golden pocket is. It's or the 236 and the 1618 is. You know, right in here is where the 618 golden pocket would be. So so you know, failure to retake 38 right now is going to be an issue for us. Okay. And movements down the way at the minute. Yeah. There's nothing positive to say about the charts here, ladies and gents. Looking for the positives, I can find the negatives very easily. Looking for the positives here on this one, jump up to 24-hour time frame and saying that, yeah, if we did get a turnaround here, we'd be looking at hidden bullish divergence. That would be good, right? And there's the overall upward trend, and that is good, right? And you can hide all the drawings just now and show highs, low, high, low, high, low, high, low, high, low, high, low, high, and the drop downs, and along the way, these drop downs from the highs to these lows have been like shocking on this coin. There's 50% over there, there's 50% over there, and here's 50% over here, right? Yeah. So you know, let's just do the episode on this real quick. Right, it's for people who are just tuning in and they don't know, I make static videos and I do them live. So that's what we do. I do static videos that are not live, but they're filmed live with a live audience like all yourself out there. Interested in my thoughts on Ocean USDT chart potential double top. Well, we could look at that, but I don't think I could be. I don't think I'll do this. What I'm doing here on that. Okay. But anyway, cheers. Right. So, hi friends. Let's take a look at CVC USDT. That's CIVIC versus Tether US. We're looking at the CIVIC price here and seeing that recently we came up as high as 59 cents on this coin. 60 cents, in fact, was our high. And then the prices retraced. And where did they go down to? A crazy lows of 26 cents after those highs. Massive, massive teardown in price. This leaves the chart looking rather negative if you were to jump down towards the time frame such as the 4-hour time frame or the 1-hour time frame, and you're to try and make an assessment of this price action, you would say this has all been very negative. However, there's an interesting point here that despite the fact that we've dropped down that 50%, we didn't take out this previous inflection area. And more over, when you do a little bit of the old forensic analysis, oh, let's hide all those drawings again. When you do a little bit more like forensic analysis on the prices and look at where the prices actually moved, you know, how they did it last time when they came up for highs, and this was a high in there at 30. Where did we see the lows come in at? And the low came in here at 21, and there was a 28% drawdown on the prices just there. I'll jump up towards the 24-hour time frame and make that same point. Where's the chart gone? Here we go. Make that same point for you with regards to then how all of these upward movements have happened for us. I've got the Dungeon channels and the Bollinger Bands on the background, by the way, so that's why I'll just get rid of them. That's why it looks messy. Cool, whatever. So yeah, right, so you had this high and then this low, then you had this high and low, etc. You had this high over here and this low over here. So this high comes in and the following low comes in there, 59% down. This high in here, following low, 56% down the way. This one here doesn't look as bad, or does it? Let's just check. Oh, there we go, 54% down the way. This one that we've just had to where we are just now, 55% down the way. It looks to me that you can be fairly sure that the original investors tend to stop dumping on you after the prices have gone down a 50% odd movement on the charts. Now, what you can also say is that as well, if you take out some Fibonacci's and etceteras, and just remove all this here, and look at the price movements between the lows and the highs, it tends to do certain things. So, you know, taking that from that low or that high down to this low, looking at the 1618, well, it came in just shy of that the next time around, doing the same thing just here, coming down. Whoops. I do that far too frequently. Doing this again here from the highs to the lows and saying, well, the 1618, he was here at the next high, the next inflection point, taking in another one from this high to this low, and then looking at the 1618. Well, woof, we actually went our way on past that again, but I suppose that last one was a little bit too much of a baby one, wasn't it? Let's just do this one more time then here and say from that high to that low tends to be that you go on to your next target. So is it reasonable to think that we could go on to that? Yes, it is. And what we need to see happen is for the jet planes to really put the pedal to the metal in here, or to the metal in here at 30 cents. Okay, 35 cents, 36 cents. Break that. Do it with gusto. See the prices subsequently move up to 43 cents and take out the previous high. The previous high is a pushing past the in terms of the body closers, pushing on past a golden pocket retrace. But you could happily take profit if you wanted to trade it from here to there in at around about that 48, 49 to 50 cent level. But taking out those areas is when you can easily see a subsequent then 50% extra on from just a 618 to that price point. You know, massive move up. But what we're talking here in terms of the recent lows to the highs would indeed be 180% up the way. So like I say, you know, overall the chart looks like looks rubbish, tends to look rubbish before it looks good again. This here then could be hidden bullish divergence if we see this move towards the top side on the MACD. That would be nice, especially given that we had a lack of, you know, bearish divergence on the way up. Again, lack of bearish divergence on the way up. Not hidden bullish divergence at this low necessarily compared to the previous lows, but, you know, notable that we're above the median line. Got Rick and Morty lips on the go. We're not quite kissing, but we're coming close to it with this on the low term time frames here. So we're looking to see this snap around again, as it has done frequently after the drawdowns in the past with a snap action. That would be nice to see again. Of course, failure to do so would be a change in circumstances, like it failed here, and we'd have to look and see, can we take out the structure of the previous highs and lows if we fail here. So if we fail, we'd be looking at saying, can we take out the structure of the previous highs and lows along our way down the way? Okay, and yeah, cool. That's so we've moved down past the negative line and the neutral line on the stochastics. It's not really not looking that good. Like I say, the charts tend to look really awful here on this one until they look good. That's a shame for them. And then we looks like we're about to start looking awful here. Could we see a little bit of more badness before some good side? I don't know. It'd be nice to see these just not actually negatively cross, just come in for a little kiss and then continue on up the way. Is that particularly good? No, I don't like trading it. I don't like trading based off of, you know, that type of idea, but that's the idea at the minute. And I would have to manage my risk accordingly. You know, realistically, taking out these lows again at 27 is quite bad, as you can see. You know, if you're going to talk about things like that, then just bear in mind that when we've done these sorts of things in the past, we tend not to get a decent recovery, and the recovery will be good, perhaps. You know, at least for a 618, you'd imagine. However, failure to do so. That's CIVIC for you. Hard lines for everybody who just simply bought into it on the hype of it coming up to these highs, right? And bear this in mind with your next high, and that's probably going to be in at the 79 area, and then from 79, you know, you could easily then see a 50% retracement in the prices down towards this area. You know, at this point the prices are coming in, if I just draw in, the prices will be coming in around about here, and therefore not taking out our previous lows, yada yada, as we've done all the way along in this story so far. So that's your story, that's your CIVIC. Okay, there isn't anything more to it than that. I could look at various other things, but there isn't anything worth looking at beyond that, to be perfectly honest with you. Bring on the moving averages, for example. Yeah, so yet another retest of this. We could do it again. Yeah, we could. It could fail. Yeah, it could. We're not quite done what we need to do to start getting super positive. That's where we are. That's life. Are you going to talk about Bitcoin? Did that one. Then I did CIVIC for somebody as well, so that's cool. If you have the time, how about checking out DNT? Mimics CIVIC, in my opinion. What do you think? DNT. That's not Dent. That's something else. Can we change everything to Rick and Morty so Head and Shoulders can be Pickle Rick? Maybe. I'll give that a maybe for now. Let's try like DNT. Then I'm going. People are taking advantage here, by the way, and that, so I don't have to do it. That's DNT Corp. You don't want to look at that, although maybe I could just to troll you, but we'll not. We'll go District Docs. It's District Docs. Cool. Exact same story. Nice one. Don't need to do anything here. Yeah. It just gets pumped up every so often. So yeah, this is just lovely bull market bull market pump and dump. You know, it's the opposite of this. There's your inverted chart for you. This is bear market or sideways. If Bitcoin's going in bear market or sideways, and the investors and stuff like that want to dump on you, then that's what that looks like. And then in a bull market, when the investors want to dump on you, that's what that looks like, except, you know, they obviously get the chance to rebuy in again, as opposed to selling again, right? So that's your market structure there. That's what you're looking at. This is all there really is to it. That pump and dump scheme ends with, given that, this is the all-time lows to highs retracement here, then we were always going past the 236 on this one with these dumps, obviously, with this sheer depth of them. But let's talk about it ending when we get closures below the 50 simple moving average and below the 618 Fibonacci retracement point in here. So as things stand currently, 17.7 is the danger zone really at the minute. And that's just going to have to just be the way that this is, you know. Again, you know, 236, you know, again, like, it's the same story. You could see profit taking coming in here at 33. Why not? Wouldn't be too unwise to think about it from that point of view. But then, of course, is what it is. The golden cross happened over here. We've retested the 50 so many times. This is the first time that we've really... This is not the first time we've broken it. And the last times that we broke it, what we saw was a nice V-shaped recovery up towards it in these areas just here, and we did that again just here. So we've not taken it out as yet, but that's how it's going. Is there any, I mean, this is what I mean about things when I talk about things as well, how people get price discovery wrong. You know, it's always in price discovery mode. People talk about price discovery mode as being all-time highs, but that's not actually, you know, accurate from a textbook or general understanding of economics or any of that sort of point of view. Price discovery happens all the time. It's the relationship between supply and demand, and this is painted on price discovery for you, and it's easy to see. What we're seeing here is the potential. Oh, Rick and Morty lips. Rick and Morty lips. We had a nice inverse pickled Rick over here, and we had nice. It wasn't inverse pickled Rick in terms of the head and shoulders aspect of it, but it was certainly it was certainly a nice Mr. Poopy butthole, move over there on that one as well. What do I think of this one? I think that you're going to experience, if you're trading it with leverage, getting stopped out. You're going to experience lots of pullbacks with this over the course, and if it ever does crash, it could be horrific. Sure, it could be. We're in a position of where the negative strength, the trend, is about to completely dematerialize if we're able to push on past here, which we could be able to do. We certainly could be able to do, and that gives us more hidden bullish divergence on the RSI and the MACD, if we want to think about it like that. I'm really sorry, buddy. I mean, what can I say? I mean, it's fun to trade these things, but really, I mean, what can you say? There's so little to talk about really in terms of this is from a technical analysis point of view. It really just depends on what flavor you want to use to do it. You know, I've used arrows, Fibonacci's, and the moving averages to do it, right? With all these arrows that are floating around everywhere, and joking with Rick and Morty stuff. Simple horizontals are also extremely useful in this scenario. Bearing in mind that we have operated in terms of just range and price action following on from a pump. You know, when that gets initiated is not going to be you that decides it, most likely, unless you happen to be part of that audience. So anyway, yeah, that'll do for that. Cool. That's cool, huh? Snake Jazz, my new jam. Snake Jazz, yeah, consolidation, Snake Jazz. So that's it. I'm sorry that I can't say anything particularly revealing on it. It's quite nice that they've got similar, that these two coins, CIVIC and DNT, are both, you know, following CZ's instructions on how to distribute their coin. To the letter, exactly. Maybe it would be nice if they were to mix it up a little bit, just a little bit, you know, and not follow CZ's instructions exactly to the letter. Let's have a quick look over here and see how this one's getting on. Oh, this one says, okay, look, you know, the memo comes in from CZ, $4.99 for embracing the pickle rig. Cheers, K-Talk. The message comes in from CZ about what they're going to have to do with their prices, and that the maker group are, you know, that their market makers have only got X number of staff on them, and that X can do Y number of projects on a daily basis. So their date for it happening is Z, and then you get a Z and you get a Z over here, and the memo comes in, and it's great, and everybody makes money. Everybody makes money. But mostly the people who've already got the money and the information are the ones that make the money in that situation, right? This is the same scenario over here, same scenario as well. It consolidates, it gets pumped, it dumps back down again, it gets pumped up. This pump around here, though, has been a bit of a failure, hasn't it? This is more interesting. At last, something a wee bit more interesting with this chart, given that we've come up for a golden pocket retrace and no further. This is interesting to see. Unfortunately, we don't have the time, ladies and gents, to do technical analysis on this one because Rocky is tuning out. But it's interesting to see that. Have we got a cross here? Yes, we do. Oh, just as it boiled off as well. Nice timing there, Dent. Nice timing. I'm going to remain bullish on this one, you know, as I am in the market in general, and all that, you know, going to remain bullish on it until such times as it has a Jerry, you know, until such times as it has a Jerry, it does a Jerry. It's okay if it wants to act like Morty from time to time, because we know what it's like. But if it actually properly does a Jerry, how would we know that things have gone full Jerry mode then with regards to this one? Like, how would we really know? Then I suppose as well on this, like, you would take it from your lows up to your highs. Oh, fuck it, somewhere in there, right? And then you would say that one of these lines in here, well, we know it's this one at 23, in that mess, that would be where you would be like, yo, Jerry, get your hands off the steering wheel, please. Unfortunately, Jerry's hands are actually on the steering wheel right now, and that's funny to see with this recent rise up, bringing us up to spot on to where that's happening at. So this is what I meant by more interesting, as you can see. So we're at the Jerry zone. We're at the Jerry zone right now. Let's just draw in the box. The box rotated rectangle. Now let's go for a regular rectangle in this one. So this is Jerry zone in here. Now there are safety lanes on the bumpers when Jerry takes control of the car, and they come in at this range here. And then a major profit taking target for us, if we do see something like that happen, is going to be, where is she? In here. Ugh, whatever, right? I'm done here. Show me what you've got. Okay, cool. Yes. GME, $117. Hit